please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to a fresh new edition of Taking Stock. We are of course going to look back at what the week has done. We're going to look ahead and try to figure out what the coming week holds for investors and traders. I'm Prashant Nair. With me is my colleague Ekta Batra. Ekta, eventful week.
Hi, Prashant. Yes, absolutely. It was a week where we had the RBI policy and overall the Nifty ended above 10,700. Separately, just to give you a sense in terms of how the markets performed, the Nifty was up around 0.7% for the week. The mid-cap index outperformed the Nifty for the week, up around 1%. And we were largely in line with the global markets. Remember, we started off the week with a global underperformance as compared to what the other markets were doing, but we managed to reduce that, and it was in step with what the global markets did. The Nifty Bank, however, underperformed with a cut of around 1%. In terms of gainers, it was Sun Pharma up 9% week to date, Tata Motors up 7%, Reliance up around 6% Infosys up 3%, State Bank of India up 2.5%, to give you a sense in terms of all the different sectors that gained. In terms of mid-caps, a lot of the PSU banks rallied, so PNB Indian Bank up 8 to 9% week to date. But a couple of stocks from the broader markets continued to see pressure. So Quality, for example, lost 26% of its market cap. Manpasand was down 17% on a week-to-date basis, Prashant.
I mean, that is a wrap-up for what happened. But if you look at the big cues in terms of what will dominate trading action next week, I think it's a very clear divide. The global stuff is still pretty strong, whereas the local cues are not that clear anymore. So, I mean, let's just tackle that. So global and especially global developed markets, not emerging markets, but global developed markets are looking pretty good. You look at US equity indices, I mean, NASDAQ, for example, there was the Philadelphia Semiconductor Index, which has taken on the previous 2000 peak. That happened, of course, late week before last. You look at other indices as well. There are down days, but broadly the trend is strong. Then you look at oil. It's not going up. It's not really cracking. It's in its range, which is not bad news actually. Not for consumers and neither for oil producers. And of course, there is a dollar which was rallying within a downward sloping trend line, but it's now started to top out. It looks like it's topped out. So it's not a bad combination. Equity market strong, oil ranged, and dollar which is declining. Emerging markets, though, are in a pretty, I won't say poor shape, but the currency market surely is flashing red. So you look at the Brazilian currency, the South African currency, the Mexican currency, anything between 3 and 5% damage this week for those currencies. In India, I mean, coming back to local stuff, the big talking point till the middle of, I mean, actually this week as well, but it was the big correction in mid caps and small caps. What we've seen is mid caps and small caps bouncing off the week lows by about 4.5 to 6% respectively. So we've seen sharp bounces. Question is, will it continue? I mean, if you look at sentiment, not very much has changed. In terms of news flow, are we expecting something very positive which will act as a propeller? Unlikely. I think it'll all come down to flows. FIs have been selling. They sold in April. They sold in May. $1 billion in April and about $1.5 billion in May. And they're not really coming in to buy big time in the month of June as well. The good news is in terms of mutual fund inflows, as the data on Friday showed, things are looking pretty steady. Just a couple of global events to keep an eye out on over the weekend. When we come back on Monday, we'll have headlines from G7. The G7 countries are meeting. Will they issue a joint statement? Expectations are running pretty low. And then next week, on Wednesday, Thursday, and Friday, we've got 3 central bank meetings. We've got the Fed, we've got the ECB, we've got the Bank of Japan in that order. Fed is expected to hike by 25 basis points. ECB and Bank of Japan are expected to stay pat. But I think attention, because of this broad theme that central banks around the world, especially the developed ones, are starting to normalize, attention is going to be focused on what they say. All these three, especially the Fed and the ECB, really say. But I think let's take all of this to our guest, Ekta.
Yes, in fact, joining us on the show to discuss the week on Dalal Street is Andrew Holland of Avendus Capital Alternate Strategies. Andrew, hi, thanks very much for joining in. Well, it's been a good recovery for our markets. We're at 10,700 plus. Do you think that there's more to go now?
I'm not sure there's more to go. It depends on which way you mean, but I really just can't get excited at these levels. I know that you know, markets have stabilized globally, but it's going to be a big week in terms of monetary policy. And, you know, my fear is this, is that, you know, the Fed, and Prashant said the expectations are for 25 basis points. But really it could be more. And it could be more because, one, the jobs data is so strong in the US. Inflation's picking up, and they really are behind the curve on this quite considerably now. I mean, you know, we're still at easing rather than we're at tightening. So I think, you know, if you see anything more than 25 basis points, then the market's not expecting it, and that would bring, you know, global markets down. But also, more importantly, it'll bring emerging market currencies under further pressure as the dollar gets stronger on the back of that. And you know, we've seen what's been happening in you know, Brazil and other places, and South Africa, and this will just exacerbate this, and that will spill over to India, and we'll see the rupee, you know, very quickly head towards 70, and your bond yields getting towards over 8%. So that doesn't, you know, give me a healthy outlook if any of I say, you know, comes true. So I think we're going to be in for a very volatile week, that's for sure.
What are local cues looking like to you, Andrew? I mean, earnings season is behind us. You know, the political heat for now is kind of abated. Anything of note which would dominate from a local perspective?
No, I think you're right. I think well, two things. One is the macro is looking bad and the micro is looking better. But unfortunately, you know, a lot of the market consensus for earnings for this current year was around 25% earnings growth, and that's being brought down to around 20 so far. We're at 15, and we think, you know, earnings will be again brought down. So, you know, if you look at the macro side of the economy, then, you know, things are not looking great, and with the RBI having increased interest rates. And then the question is now, will they have to do it again? I suspect it's probably October, but, you know, August is not off the radar if the monsoon is not so good. So, you know, I think you know, even if I look in the next 1 or 2 months, I can say, you know, the best we'll do is have a volatile market. But you know, the odds to me are more the downside risk than upside, you know, kind of gains at the moment. And I think some of the you know, some of the pain that's been felt in mid caps and small caps is probably here to stay.
Okay, that was actually my next question, Andrew. When you say that the pain in mid caps is probably here to stay, could you elaborate in terms of what sectors you might be talking about, what specific stocks and what concerns you might have from here on?
Yeah, I mean, not stock specific, but, you know, I think the easy money was made last year, 2017, and I think, you know, all kind of mid or small cap stocks were kind of tarred with the same brush of, you know, they're all multi-baggers, and you know, with probably not a lot of to back that in terms of either the management or the businesses. So, you know, we will see that differentiation taking forward, but unfortunately on the way down it brings the good stocks as well. So that will be the opportunity, but, you know, the pain of that happening is very acute, and, you know, it's hurt a lot of funds as well as investors, you know, being, you know, not just in the wrong stocks, it's sometimes the right stocks, but, you know, you just get tarred with the same brush. So it's just on the way up it was the same, on the way down it will be the same, exactly the same.
Andrew, but I mean, as you yourself said, macros are looking a little poor, but at the margin, but micros are looking good, right? I mean, earnings are coming, as fourth quarter has showed us, and across a broad swath of companies, mid caps as well. In every frenzied rise, there will be stocks which, without fundamentals, which do very well. We saw that in the earlier bull market as well. We've seen this, seen that now. But if earnings are starting to come, I mean, why are you so pessimistic as far as mid and small caps go?
No, I'm just being generally. I'm saying that the good mid caps and small caps will be differentiated, but in that kind of whole sweep to move out of this out of the whole sector, it just brings everything down. So that's the opportunity, to build or to add to those holdings. But what I'm trying to say is that it's very selective in which sectors you're getting the earnings growth. It's not across the whole board. That's for sure. So the good news is that when that happens is that you can differentiate, and I don't think that was happening for most of 2017. And I think the February and March kind of warning in terms of a trailer of how things can really see markets fall, gave you a good idea of the pain that can be there. And then what I think is that we've probably got another bout of this pain to come. I think it's either global or local macro is probably going to be the factors behind it. And that's the time when you're looking at the sectors which will deliver stable and strong earnings growth.
Andrew, what about NBFCs? Because we have a higher cost of funds that we're probably going to reckon with soon enough, and maybe some amount of competition because of, say, the easier norms which have come in from the Reserve Bank of India when it comes on to affordable housing at least. So all in all, do you think that maybe things could get a little tougher for NBFCs from here on?
I think a little tougher. I don't think it's, with just the small hike that we've seen, is going to be a real big problem for them, because the growth is just enormous. And, fortunately, the PSU banks can't compete in any of these sectors because they have no capital to do so. So there's lots of market share as well as growth in the market as well to enjoy. So I'm a little less worried about that than I am some of the other macros which will hurt the banking sector.
Sure. I mean, you've maintained that you could rent PSU bank stocks. I don't know if you could do that now, or you'd agree with that view now. But in terms of trades, long, short, what would your top bets be?
So, it's been pretty boring for us in terms of repeating ourselves, but we've kept with the private banks, we kept with FMCG. Obviously, IT would be a sector which will be beneficiary of a further kind of depreciation of the rupee, and selective autos, and that's really where we've been concentrating, and that's really what's paid off. There's a little bit more noise about corporate capex picking up. We're not totally convinced yet, but I think that could be the new kind of area which will excite investors. We're all looking around for for sectors which will give us some upside, and unfortunately there's not that many which will continue to deliver. So looking for new sectors. I mean, obviously today is the Farmer Day, and everyone's getting excited. I'm kind of less excited. With pharma, just to go through it, the pain has just begun. And if you go back and look through, say, the telecom sector or the IT sector a few years back, when they were going through the similar kind of start of the pain, you'd have bouts of kind of the stocks looking better or some good news, but it quickly evaporates. The bad news comes back again, and then the share prices fall. So I'm not a buyer into this pharma. I'm not even a buyer because the rupee is depreciating either. I think they've just got some real big problems which they've not faced yet, or not actually challenged themselves to face. So that's one sector which we will continue to ignore for some time. PSU banks, whilst we'll see what comes out of the meeting today. Again, there's no real scope for them to do very much, even if they get even more capital. They just have to kind of, just keep them afloat rather than anything else.
What about the IT space, Andrew?
So the IT we've been quite bullish on for some time, partly because the pain has been taken by the sector, and valuations became more reasonable. And one of the things that we were looking for was either give us back some money through dividends or buybacks, and the combination of that means a higher yield. And that's what they've been doing. So that gives us, a little bit more kind of breathing space while, say, you know, start to kind of build, you know, the growth back into their companies. And obviously the rupee will help. It'll be a tailwind for them in the short term. So it's a great place to hide, because, you know, if I'm right in what I said at the very beginning, then you know, you're going to need places to hide.
Okay, all right, Andrew, always a pleasure listening to you. Thanks very much for joining this evening. We need to take a break now, but let's listen in to some market opinion that we heard through the week. And when we come back, Ashwini Gujral will join in to give us the technicals for the week to come.
Been a bit dichotomous in the sense that while the index has broadly remained stable, we've seen significantly deeper corrections outside the index in the broader market, particularly in mid and small caps. You know, we would rather hope that even some of the large cap names correct a bit before it starts getting attractive from a valuation perspective, particularly given the sort of headwinds that we're facing from a macro perspective. We would like some of these names to be a little more cheaper than what they are.
We've been in a deep earnings recession. This has been the worst earnings recession in India's history. I feel now we have kind of come to a bottom. Revenue growth has been accelerating for the past 6 quarters. Even for this quarter, the revenue growth for various cuts of the market is somewhere between 12 and 15%. So that's a very robust revenue growth. What's not happened as yet is that margins have not recovered. Bulk of this pressure is in the corporate banks. So if you X out the corporate banks, then I think earnings have actually inflected already in the upward direction.
We have seen a 3.6% correction, rather cut to FY19 EPS after the results season, the March quarter results. The year-on-year growth now is 34% in FY19, which looks very high, but that's because there are a lot of one-offs in the FY18 base. But I still think that we will end up at 25-26%. So by and large, I mean, some cuts will continue, but hopefully not at the pace at which we saw them in the March quarter. The FY18 numbers are 6-7% lower than they should be. Then at a 25% growth that we now think FY19 will settle at, we're actually talking about a 17-18% growth, which is not that aggressive. Maybe you know, we could be 2 or 3% points more aggressive, but because of the low base of FY18, the headline for FY19 will look strong.
India doesn't look particularly attractive from a valuation perspective, but India almost never does. India almost never gets really, really cheap. I think the key question for India is more around profitability. So Indian profitability has been a bit slower to recover than that for other countries in the region. It's lagging a little bit, and this year is a key year in terms of profitability for investors coming into India.
Hi, welcome back. You're still tuned into Taking Stock. Well, joining us now is Ashwini Gujral with his view on the technicals of the week. Ashwini, hi, thanks very much for joining in. Well, what were the takeaways for this week, and what would you recommend for the coming one?
Well, this week the market has been range-bound and choppy. It tried to break down on the day of the policy. That failed. And post the policy for 2 or 3 days, we went up. I think the upside trade has also failed. So broadly, Nifty is now in a range of about 10,680 to about 10,820. And Bank Nifty 26,300 to about 26,800. Basically, this phase of the market is known as contraction. This happens, you know, after a large, massive move, and it builds energy for the next big move to happen. Now that earnings, etc., and most triggers generally are done, I think the market will spend some time ranging before it again tries to expand.
Right. I mean, so what would you do as far as Nifty, Bank Nifty goes? I mean, around these ranges, and what would those near-term ranges be?
See, extreme short term on the Nifty is 10,680 to about 10,820. A longer term range of about 10,400 to about 10,900 sustains. Within that, these smaller ranges are playing out. Similarly, on the Bank Nifty, the larger range is 26,000 to about 27,000. Within that, now we are narrowing down further, 26,300 to about 26,800. This week, mid caps had a sharp short covering, which was expected. But at the same time, large banks, HDFC Bank, ICICI Bank, HDFC, the larger stocks face some selling, possibly from the FII. So there is enough going up and down, and hence that's keeping the market a bit flat.
Yeah, Ashwin, from the lows of the week, the mid-cap index was up 4.5%, small-cap index was up almost 6-odd%. Can one say that maybe the worst is behind?
This is a market where extrapolation is a dangerous game. This game could have been played last year when anything you bought went up. This is a market where now maybe the worst of the price damage may be done, but from here I think mid-caps will go up, then they will come down, retest, do a lot of nothing. Because till the elections are out of the way, I don't think big money is going to move in. And if big money does not move in, then, things remain choppy. Well, opportunities in, good stocks like Avanti Feed, Thirumalai, Chemical, etc., the good quality mid-caps, that remains. But overall, if you have to make money in this market, you have to buy stuff which is at new highs. So I speak of those stocks every day, the Bajaj Twins, Reliance, Avenue Supermart. These sort of stocks, they should continue to rally. Rest of the market should now be ranging. Possibly the price damage more or less may be done.
Ashwini, so what would your trades be for the coming week?
See, again, bit of a short covering tinge to what I am suggesting. IGL, it started moving late day. That is a buy with a stop of 275, target of 290. Oro Pharma is a buy with a stop of 566, target of 590. And PVR is a buy with a stop of 1390, target of 1450.
Okay, all right, Ashwini. Thanks very much for joining in this evening and giving us all of those strategies. Well, we need to wrap up on taking stock as well. Thank you very much for watching and have a good weekend.